Let's look at this next question. What is the primary function of the securities market? Here are your options. A. To facilitate trade between buyers and sellers. B. To enable the flow of capital from savings to productive investments. C. To regulate financial institutions. Or D. To ensure government funding. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The securities market provides channels for converting savings into investments, allowing businesses to raise capital and investors to deploy their funds effectively. Let's tackle this exam question. Which of the following is not a type of investment objective? Here are your options. A. Capital preservation. B. Capital appreciation. C. Capital depreciation. Or D. Current income. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Investment objectives include capital preservation, appreciation, current income, and tax efficiency, but not capital depreciation. Let's tackle this exam question. What is the main difference between investment and speculation? Here are your options. A. Investment is long-term while speculation is short-term. B. Investment guarantees returns while speculation does not. C. Speculation requires government approval while investment does not. Or D. Speculation is risk-free while investment is risky. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Investment typically involves long-term commitment with detailed analysis, whereas speculation involves short-term buying and selling based on price movements. Let's look at this next question. Which of the following is an example of a financial asset? Here are your options. A. Real estate. B. Gold. C. Bonds. Or D. Artwork. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Financial assets include stocks, bonds, and deposits, while real estate, gold, and artwork are tangible assets. Let's tackle this exam question. What is the key characteristic of equity shares? Here are your options. A. Fixed interest payments. B. Ownership in a company. C. Guaranteed returns. Or D. Repayment priority over debt holders. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Equity shares represent ownership in a company, giving shareholders voting rights and a share in profits. Test your knowledge with this one. What is a key feature of government securities? Here are your options. A. High default risk. B. Guaranteed liquidity. C. Issued by corporations. Or D. Risk-free investment. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Government securities are considered risk-free because they are backed by the government and have low default risk. Let's look at this next question. Which of the following is an example of a primary market transaction? Here are your options. A. Buying shares from a stock exchange. B. A company issuing new shares to investors. C. Trading government bonds in the secondary market. Or D. Selling shares from one investor to another. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The primary market deals with new securities issued by companies to raise funds. Test your knowledge with this one. What is a secondary market? Here are your options. A. A market where investors trade existing securities. B. A market for issuing new securities. C. A market for only government securities. Or D. A market for direct corporate lending. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The secondary market enables investors to trade previously issued securities, ensuring liquidity. Test your knowledge with this one. What does risk premium refer to in investments? Here are your options. A. The discount on stock prices. B. The interest rate on government bonds. C. The fee paid to portfolio managers. Or D. The extra return required for taking on risk. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. Risk premium is the additional return investors demand for taking on extra risk compared to risk-free investments. Which of the following investment types is considered the least risky? Here are your options. A. Corporate bonds. B. Government securities. C. Equity shares. Or D. Commodities. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Government securities have the least risk since they are backed by the government and have low default probability. Let's tackle this exam question. What is the purpose of a rights issue? Here are your options. A. To raise capital by offering shares to new investors. B. To reduce company ownership. C. To increase share price volatility. Or D. To provide additional shares to existing shareholders. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. A rights issue allows existing shareholders to buy additional shares at a predetermined price in proportion to their holdings. Moving on to the next one. What is an initial public offering, IPO? Here are your options. A. A sale of shares by existing shareholders. B. A company's first sale of stock to the public. C. A secondary market transaction. Or D. A type of private placement. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. An IPO is when a company offers its shares to the public for the first time to raise equity capital. Let's look at this next question. What is a qualified institutional placement, QIP? Here are your options. A. A method for listed companies to raise capital from institutional investors. B. A private placement of shares to retail investors. C. A government-issued bond scheme. Or D. A type of derivative security. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. A QIP is a fundraising mechanism where listed companies issue shares to institutional investors without going through a public offering. Let's tackle this exam question. Which of the following best describes the role of a portfolio manager? Here are your options. A. To issue securities to the public. B. To regulate the stock market. C. To manage investment portfolios on behalf of clients. Or D. To provide loans to investors. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. A portfolio manager is responsible for managing investment portfolios for individuals and institutions to maximize returns based on risk tolerance. What is a key difference between mutual funds and portfolio management services, PMS? Here are your options. A. Mutual funds require higher investment amounts than PMS. B. PMS offers customized investment strategies, while mutual funds pool investments. C. PMS is open to all investors, while mutual funds are only for institutions. Or D. Mutual funds invest only in government securities. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. PMS provides personalized investment management services, whereas mutual funds pool funds from multiple investors and invest according to a predefined strategy. Here is another practice question. What is a derivative in financial markets? Here are your options. A. A contract whose value is derived from an underlying asset. B. A stock issued by a company. C. A fixed income security. Or D. A government bond. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. A derivative is a financial contract whose value depends on an underlying asset, such as stocks, commodities, or indices. What does NAV, net asset value, represent in mutual funds? Here are your options. A. The total profit of a mutual fund. B. The per unit price of a mutual fund scheme. C. The annual returns of a mutual fund. Or D. The total expenses of a mutual fund. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. NAV represents the value of one unit of a mutual fund, calculated by dividing the total value of assets by the number of units outstanding. What is an alternative investment fund, AIF? Here are your options. A. A pool of private capital for investment in specialized assets. B. A government investment scheme. C. A mutual fund scheme. Or D. A retail savings account. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. AIFs are pooled investment vehicles that invest in specialized assets like venture capital, hedge funds, and private equity. What is the primary benefit of diversification in portfolio management? Here are your options. A. To increase investment costs. B. To reduce risk by investing in different asset classes. C. To maximize tax benefits. Or D. To focus on high-risk investments. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Diversification spreads investments across various asset classes, reducing overall portfolio risk. Let's look at this next question. Which of the following risks is associated with the uncertainty of future regulatory changes? Here are your options. A. Market risk. B. Liquidity risk. C. Regulatory risk. Or D. Business risk. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Regulatory risk arises from potential changes in laws and regulations that could impact investments.